Everyone wants to live an inspired life, yet so many people search for happiness following the footsteps of peers and taking advice from people who have different values and outcomes to which they're searching. There are people born into wealth, graduated from the best universities in the world, and there are people who have none of that and yet are living extraordinary lives full of fulfillment and reward. The purpose of this podcast is to share insights and strategies that allow you to question the status quo and think freely, so you can design your life and be who you want to be. We get one life. Time is our most valuable asset. I believe that when we're free and able to focus on meaningful work, we become better human beings. This is Always Free, and I'm your host, Jason Graystone.
Welcome to the leading podcast for financial empowerment and wealth creation. Subscribe to this podcast so you don't miss an episode. You can connect with Jason on social media and subscribe to the Jason Graystone YouTube channel for weekly videos. Don't forget to also subscribe to the weekly newsletter to receive frequent educational content and action steps to help you design your life so you can be who you want to be. For news on all future events and updates, go to jasongraystone.com.
Well, welcome back to the podcast, guys. I hope you had a good week so far. This week's gone very, very fast and slow at the same time. Very eventful week. If you're listening to this podcast for the first time, this is the number one podcast for financial empowerment and wealth creation. And if this is the first episode you've tuned into, then you're in for a real treat. However, after this one, make sure you go back to episode 1 and start there, because you really will get the benefit of the podcast as I take you through a strategy in order from episode 1 up to around 17, 18, maybe 20, and you'll really get the most benefit from that. But you're here, so thank you. And this week, as I say, is one of our special weeks because we've got a guest, a friend of mine, Ben Hedges, aka Credit Shifu, aka many other names all over YouTube, and you're in for a real treat this episode, because we're going to be talking about things that are going on in the market, all of the craziness that's been happening with GameStop and Wall Street and Reddit, and we're going to be talking about people's just approach to investing, what's going on in the collective market mind right now. Talk about Elon Musk. We're going to talk about some investing strategies and some life hacks when it comes to leveraging other people's money and credit cards. So it's going to be a real jam-packed episode. But before we get real stuck into the meat, please welcome and thanks for being on, Ben.
Hey, well, yeah, Jason, it's really great to be on your podcast finally. We met, what was it, probably a year ago or something.
Wow, yeah.
Hung out, had a drink, and then I think we talked about this back then, but it's great to finally come on and be part of the show. I
appreciate you being here, man. So look, for those of the listeners that don't know you, by the way, Ben's got a huge following all over YouTube and his social media channels, and all of his links will be in the description of this podcast. But for those who don't know who you are, Ben, just give us a little bit of background about you and what you do.
Sure. So I run the YouTube channel, The Credit Shifu, which is my main channel that people see me on. It's giving advice and reviews of credit cards, financial products. But I started on YouTube back in 2013 doing Chinese language content. That's my major in college, Chinese language. So I have a channel that's got about 700,000 subscribers. That's news and political commentary channel.
You're fluent in Chinese, right?
Yeah. It was my degree at the University of London School of Oriental African Studies. I have a channel that's a Chinese channel, and then we have. So I worked for a company, NTD Television, for about 5 years, and then we left. When me and my business partner left, we started some other YouTube channels. So we have a Star Wars YouTube channel that's all about Star Wars, sci-fi stuff. That's about 600,000 subscribers. People who follow me for the finance stuff, they may randomly see me doing sort of like Star Wars videos. Sorry, I just someone just I'm using my phone. Someone just texted me. They may randomly see me with like Star Wars videos or something, or other things across YouTube. So I even have a ski channel as well, which is for the tax deductible ski trips.
Yeah, right. So look, I was before we get kind of into the crux of the conversation, I think it's really relevant to bring up your approach to lifestyle hacking and business in general, because you mentioned you've got different YouTube channels, but really it is for financial freedom, isn't it? Because you're essentially paying for different parts of your lifestyle via hacks in using business expenses. I mean, the skiing channel, I remember when we met up, you said you love skiing. So you was going to just start a skiing channel to add as a business expense, right? So tell us a bit about your thought process around that, and how you use that leverage.
Well, there are several, back in the day, maybe 5 or 6 years ago, there were several YouTubers who were doing these like travel channels, like Fun for Louis, he's from the UK actually, Louis, I forget his second name, but and then there are a few others. And basically me and my business partner looked at him, we were like, wow, they just kind of expense their life, because whenever they, they're just traveling all the time. So whatever hotel they stay in, it's a business expense, right? So their life is kind of to a certain extent tax-free, right? So we were like, wow, we could do this. So with some things, obviously you can't go overboard as if you're, scamming the government, but if you're going to do things like, you love skiing or some whatever, why not make a YouTube channel out of it, actually make money off of it, and have basically a tax deductible ski, vacation, right? Holiday. And actually, when I met you, I think I was just about to go to France.
Yeah.
So we did the Alpe d'Huez, the tunnel run, which is this famous ski run in France. Very steep. You have to ski for a tunnel to get to it. And that got 200,000 views on YouTube. Actually, that's the thing that got my channel, to monetization and stuff. So yeah,
incredible.
Pretty cool.
Incredible. So like we often talk about, wealth not necessarily being about having lots of money. It's a balance between having enough free time and being able to use leverage or have leveraged income. I like the word leveraged income from assets like YouTube or investments or, digital assets that you might have out there working for you that allow you to just free up your time a bit and cover your lifestyle costs while being able to choose what you do each and every day. And to me, that is financial freedom. That's the true meaning of financial freedom. And you're a living example, right? So you live over in America right now, right?
We do. Yeah. We live here. We run a business with like 6 or 7 YouTube channels right now. And YouTube is that kind of thing, because you're not exchanging your time for money. I'll never do that again. I never want to exchange my time for money directly, like $15 an hour or $20 an hour or whatever. I want to create something that then goes out and makes money. Like I make a YouTube video and I put it up there and it starts making money for me. And, over the next couple of days, it'll make like $200, $300, $400. And then, maybe it'll have a trickle of passive income for the rest of its lifetime, maybe like $5 a month or something. But yeah, just doing that is my preferred approach rather than directly exchanging time for money.
Absolutely. And I think it's especially digital assets like videos that go onto YouTube. What I'm seeing is you can put even if you're generating 500, 600 pounds a month from YouTube. I mean, if you was to go and put that into property, for instance, just as a comparison, you'd have to go and buy like, I don't know, 300, 400,000 pound house and then rent it out to maybe get £400 profit on top of the rent and the mortgage and all the rest of it. So it just seems, it's just it's highly leveraged, and it's a great thing to do. So tell us how you got into, because your main, like you're well known as the credit Shifu, right? And I came across you years ago when you was using all the different credit cards to kind of accumulate points and use points in different restaurants and airlines. And that intrigued me because at the time I was kind of using air miles and things like that, but I wasn't really, using it in anger, should I say, really pushing the boundaries of credit cards. And that's something you've done phenomenally well. So what made you go into that, first of all, that credit card scene? What was the story there?
So after I graduated from university, I came to the US to work, right, for this TV station, NTD Television. And I discovered very quickly that if you do not have a credit score, it's very hard to rent a flat or get a mobile phone plan or something, because everything kind of based on your credit score. So you end up having to pay huge deposits for everything. So the mobile phone, I had to pay like a $400 deposit for a phone plan, right? So that they, as a guarantee that I pay each month. Or renting the first studio apartment, that was 3 months rent up front plus a 3-month security deposit. So it was like about 6 months rent I had to part with.
Wow.
You know, it was about $7,000 out of my pocket, just to rent an apartment, right? So it was crazy. And then I was like, why is this? You know, I started asking people, and it's because you haven't built up your credit score. I'm like, well, what's that? And they were like, well, it's surprisingly easy. You can actually build it up pretty quickly. And so there was this website, the Points Guy, which is, they have a UK version now, actually, which you might have seen. But he started in New York, and he has a site that basically tells you how to build your credit score, but it also tells you how to use the points from credit cards for free flights and stuff like that. So I started building my credit score looking at his advice, and it built really quickly. Within like a year, I was able to get, you know, anything without a deposit, you know. So it was really crazy that at the beginning I struggled with all these, you know, paying ridiculous amounts of money up front, out of pocket, you know. But then after I built the credit score, I started looking at the credit card points and thinking, oh, you know, I'm not earning a huge amount of money right now. I would love to just go and travel and go travel business class and 5-star hotels and stuff. Wow, it looks like I can actually do that for free using these points, and you really can. It's incredible.
Yeah. I think people underestimate the you know, the benefits to using air miles. What I've found is, you know, if you don't really have the discipline to use a credit card as that middle transaction and literally pay it back straight away, I think that's where people, you know, they basically go into the danger of actually it's costing them money and it's not worth doing. There's kind of a fine line between it being a benefit to you or just no, you're spending money that you never had just because you've got a credit card. I think if you're going to do this kind of thing and you're going to use the air miles and you're going to you kind of have a, not an income, but it's an upgrade to your life. And if you want to do that, you have to have the discipline to use the credit card as just a middle transaction for all of your expenses, and then that is it. It's not to, you have to pay it off like on time, otherwise it's just not worth it because you're going to suffer the interest. So tell us, what's some of the biggest like wins you've had on a credit card? Like what have been your best luxuries free of charge?
Okay, yeah. I'll say so. Well, I had 2 really great vacations, really great holidays, and you can search these on YouTube. Actually, if you search Ritz-Carlton, there will be a video that comes up literally at the top of the search results. That's on the thumbnail. It says like best hotel ever, and it's got a picture of this hotel on a beach, right? Or if you search Hyatt Ziva Cancun, one of the top videos that comes up will be my video. So both of these trips, they would have cost about $10,000 if I paid with money. And these were just like 4-day trips to the Caribbean, right? I'm trying to use the British pronunciations in Quebec. Anyway, so, you know, because I blend in here by using all American words. But anyway, I don't want to stand out too much. But yeah, so these were like at least $10,000 trips to the Caribbean, and I got them for probably spent around $1,500 to $2,000 plus a load of points. So about 15 to 20% of the price I paid plus credit card points, because there's always some taxes you have to pay and a few things. So you can't get it completely for free. But yeah, the Ritz-Carlton, that hotel is incredible. It's you know, Ritz-Carltons are always awesome, but it's like on 7 Mile Beach in Grand Cayman. It's a white sand, and you got like amazing restaurants, and yeah, just awesome. And then the Hyatt Ziva Cancun, that's an all-you-can-eat or all-inclusive resort, so you can go to any restaurant there. You don't have to pay the bill. It's all included in the price. So you pay, I think it was 40,000 Hyatt points. No, 20,000 US is 40,000. So you can get 2 nights already just from the sign-up bonus. Wow. And then you earn a few more points, and you know, and yeah, the only thing you have to pay extra for is lobster. But the drinks, yeah. But the drinks are all free. The food is all free, and it's a resort with beaches, water parks. Like, it's awesome. Amazing. Yeah. And I flew there first class as well.
First class as well. Wow, incredible.
Which was paid for with points.
Amazing. I've always found that kind of the sweet spot for upgrades is always business class. I think that's I think they charge, like, you talk about economy and then premium economy, and it's kind of like I don't know, 25, 50% more. And then from premium economy to business class is like double. And then business class to first class is double, but it's not double the value of business class. So I always think that business class is kind of the sweet spot, if you like. So what the listeners, I mean, how long was you away for? Like 7-day holiday or like how long was that? Were those breaks for?
These two were 4 days. 4 days each.
Okay. So the listeners
from New York, you can go down to the Caribbean for a quick getaway, like a long weekend kind of thing.
Right. Amazing. So the listeners are now going to be asking, like, what are some of the things that they can do to accumulate points? Because I think people just think of like petrol or, they don't really think outside the box. So give us some tips.
If you, in the UK, are most of your listeners in the UK or are they all over the world?
They're all over. Yeah.
Okay. So, well, in the US, I'll start with the US. So in the US, you can get, some of the best credit cards are from Chase Bank or American Express and also Citibank. Those are kind of the three big ones. Yep. And most of these credit cards, I invented this tier system of credit cards. There's 5 tiers. So it goes from tier 1, which is just sort of building your credit. So that's a card that offers no rewards, kind of just helps you build your credit score, right? Tier 2 would be cards that often offer cashback, and their sign-up bonus, typically they have no annual fee, and their sign-up bonus will be around $150, okay? So that's cool, but not really great for what we want to do. Tier 3, they have an annual fee typically of around $95, but their sign-up bonus in the form of hotel points, airline miles, transferable points, whatever, will be worth around $500 or more, okay? Right. And then tier 4, they have expensive annual fees, but the sign-up bonus can be worth a similar amount. So you're looking really, the sweet spot is around tier 3, and maybe you have one card from tier 4, because those are the ones that get you into the airport lounges as well. So you maybe want one of those. But yeah, tier 3 cards, the annual fee is around $100 in the UK. The Amex Gold card, the annual fee is £140. The sign-up bonuses in the UK are not as good. They're about half what they are in the US, unfortunately. But you can still earn some miles from it. In the UK, the Tesco Club card as well, you can earn a lot of British Airways avios with that. So that's one of the things. And I don't think it's not even the credit card. It's just the normal Tesco membership. And then on top of that, there's a club card credit card as well that you can get, so you could earn even more miles. But that's one of the best ways in the UK. You're nodding, so you probably have it. Know about it.
The Tesco one, yeah. No, that's really cool. And obviously, Ben is a wealth of knowledge on credit cards. So if you want to find out everything he knows about credit cards and all of the hacks that he's kind of kindly displayed across his YouTube channel, you can go and check his YouTube. But what I want to get into now is talking more about your investment approach, because obviously you're very savvy towards leverage, and you're on this journey of financial freedom for yourself. And I know that you're investing in properties, and I know you've got other investments. But with everything going on in the news right now, I thought this would be a great. I mean, Ben doesn't sugarcoat his words. He's not shy of speaking his mind, and that's what I love about Ben. And with everything going on in the markets at the moment, I've seen him get as excited as I have with just watching the chaos. It's a true spectacle, and what I'd like to get from Ben is first of all, just, what is going on at the moment? What do you see going on? What's been your observation of that collective market mind and what's going through everyone's heads?
For the the recent meme stocks kind of stuff, or
with GameStop and
I mean, unfortunately I wasn't really part of the fun with that. So I'll tell you though, about a year ago I watched a video talking about Michael Burry's portfolio, the big short guy. Right? Yeah. And I saw that he owned GameStop, and I was like, wow. And I actually remember thinking about it at that time, like, oh, maybe I should look into that, and then I just forgot about it. And then when I heard at the start of all the stuff with GameStop, I thought back to that video I'd watched about it. I was like, oh yeah, Michael Burry. Yeah. No wonder, he knows his stuff. So, and then I looked into all the reasons why, and the PS5 is coming out. So the GameStop about made it to the next stage of the console cycle. Yeah. And the people betting against it thought that it wouldn't, that it would go bankrupt before that happened. Yeah. So there's a lot of strategy to it. And then obviously you got the whole short squeeze and stuff, which I think people know about. unfortunately, I hardly got in on the fun with GameStop. I did one day trade on it, which I got a 13% gain.
Right.
Just a little day trade, just for fun, not because it's not really my strategy. So,
No.
I wanted to kind of join the fun. And then the next day I tried to do it again, and I lost a lot more money than I'd made the previous day. So I just, I just got out of it. It's all right, screw this. I got into this late. I know when you get into something late, it's not, you get FOMO, right? And it's just like, it's a bad situation. So it's best to just stay out of it, watch it from the sidelines.
Yeah.
There were some YouTubers actually doing like live streams about it every day.
I know.
And they're a bit younger than me, and I feel like they don't quite have the experience. And they were like just watching it go up, and then like, oh, diamond hands. And
Yeah.
And they got burned. One guy, he kept holding, and he went up to like 100,000. And he came back down. His portfolio was at 18,000. And he's like, I know, I held.
So I know that's not your strategy, and you do have a strategy, but what you just mentioned there was very important. The fact that Michael Burry, and obviously he was one of the early stage adopters of GameStop and investors, and he noticed that GameStop were clinging on to the likes of fact that Microsoft were releasing a new console, PlayStation releasing a new console. They were going to require discs, and at the same time they were doing partnerships with Microsoft. They were moving a lot of the business online. But the thing is, that was happening ages ago. So when you say it's too late, I mean, everyone was talking about GameStop last week, and we're talking about something that was really, headed, really was back in 2019. It was like mid 2019 where, really the ball started rolling. And by the time everyone's heard about it, it is really too late. I mean, I can't say that enough to people. And we've seen it again with Bitcoin this week, which I've done.
Because if you want to be in the group of people who really get the like 100x gain on it, you needed to buy it when it was like a 250 stock.
When no one was talking about it. When no one was talking about it. Yeah, absolutely.
And some people did buy it at like $60, and then they quadrupled their money or 5x, which is cool, but it's not that instant millionaire kind of level where you buy it at 250 and sell it at 400.
Yeah, right. And it's not repeatable. And if you're taking that approach, the chances are you don't really know what you're doing with your money, and you'll probably lose it again. And it's just not it's not sustainable, and it's not repeatable. So compared to just going to learn about stocks, and which really isn't that hard, it's not worth it. It's really not worth it. So tell us a bit about your strategy then, because I know you have around, you're in it for the memes, and you have a bit of a laugh with the day trade, but I know you're switched on. So tell us about your approach to investing.
Yeah, the day trading and swing trading stuff, a lot of it's just for a laugh. Like I'm in Dogecoin as well for a laugh. I read The Intelligent Investor. That was my first, investing book that I read, really. And basically, I still just base most of my stuff off of that. I'm a long-term value investor. But also, I started investing with small amounts when back in 2009, right? When like at the bottom, and I did make some really good gains off of the, the recovery, right, from the financial crisis. But that was when I was really young, and it was just like, maybe 500 pounds or 1,000 pounds, right? So I made like 100, small gains. Big percentage gains, but small monetary gains. But I understood, the principle and stuff. So my strategy has always been to buy into like good, companies with good balance sheets that have a lot of cash on the balance sheet and not much debt, but who have been maybe beaten down because of some other reasons, So for example, this year, when we got to March, January, February, so like early March, I think we had the bottom of the market in March 23rd, right? I still remember that date. I just put, thousands and thousands into the market, at that time, because I knew that these companies were otherwise solid. I didn't go for any of the like CCL Caribbean cruise lines because I thought there's too much of a danger of them going bankrupt. I went for much bigger names, like Tapestry, TPR, the owner of Kate Spade, Coach, these stores, because their stores were shut down, but the company had a lot of money on the balance sheet. I went for companies like Uber. I bought Uber at $14. Now it's at $60. Because I knew Uber's not going anywhere. It's too big, and although they're their balance sheet actually isn't the best. Uber, they don't make that much money, but hey, they're a relatively new company, so they're still in the growth phase. They're like the Amazon kind of phase. So so those kind of names, I was buying big names who've been severely beaten down by the lockdowns and pandemic and stuff. And obviously that's a little bit of an abnormal time though. Normally I'm just otherwise investing in the market. The whole thing of time in the market is better than timing the market.
Absolutely.
But if you have an opportunity to time the market and you have some cash on hand, go and do it,
So there's a lot of interesting things that you said there. One was the fact that you got in 2009. That's when you really started to drip feed into the market. And I mean, that's a great time to get in because you didn't kind of experience any kind of drawdown. But I've done some analysis on that as well before, where I did an analysis where if you started investing before the crash, or you timed it perfectly, today you would end up with much more profit if you invested before the crash, just before the crash. And that's because you're having that dollar cost averaging. That's because you're having skin in the game. And as you say, it's about time in the market and not timing the market. And I've done many studies on that. And another interesting point you made is it's not so much the companies that you selected, because obviously with choosing companies, you actually have to know how to read income statements, balance sheets, and read the story of the business. But what you said, I think, blows many people away. The fact that you said on the lowest day, and it was the crash of the market, you was then plowing all the money in, and that's something I talk about all the time. And I think people just lose their mind.
I was plowing the money in before and after. So I guess I kind of dollar cost averaged in on the way down and on the way back up. And people were leaving messages on my videos saying, you can't time the bottom exactly. You got to just, buy when it's low and hold, So yeah. And I go back a year later and read some of those comments and leave some snarky replies like, hey, who's laughing now? Who's cashing out now?
Yeah, I think, Ben, you mentioned intelligent investor, and I think Benjamin Graham, says it great. So does Warren Buffett, where he says, you want to be fearful when others are greedy and greedy when others are fearful. And I think people have really realized what that means this year. I mean, the markets have just been crazy. And if you get in when no one is talking about it and you're low, that's when you're going to make the money. You get out when everyone's talking about it. And if you can just use some basic skills of understanding the story of a stock and have a consistent approach to investing, you're going to do okay. You will do okay as long as you can be consistent. So that's awesome, man. So look, is there anything that you would advise against when it comes to investing? Have you made any mistakes or? Yeah, right. So what could you share that would be a golden nugget for people who are looking to invest, and you'd say, don't do this?
Well, first thing, all right, would be that you need to make sure that you have adequate cash reserves to, overcome a difficulty if it came, right? So if you lost your job or whatever. So don't invest the only money you have, right? So you need to have several thousand, or people say 3 to 6 months of your base costs, all right? It's not your monthly salary.
No, your
minimum base costs.
Yeah.
So 3 to 6 months, I would say, is good. Because if you invest a lump sum of money, I remember when I first started investing, my account went down for like a year before it made any money. So I couldn't really pull out any money for a whole year without losing money, right? When I didn't have much experience. So that's the first thing. Just, you got to make sure that you are not investing your emergency money. If you wanted to do that, maybe some people who are very in the know about it and are 100% certain, but certainly for a volunteer, for a beginner, you've got to be have that emergency money there to have a buffer zone, right? If you lose money, and then don't, at the beginning, don't follow hype. That's the next thing, because it's very easy to start reading about like GameStop and GameStop's going up, I'll buy it at $400, and then the next day, now it's down at I don't know, last time I looked it was at $60. I haven't looked recently, but so just don't follow hype, which is hard to do because it's like contrarian, it's the opposite of what you would think, but it's you can't follow hype.
And
that's
Yeah, they're good. They're
Go
good
ahead.
points. They're good points. And you mentioned having a cash buffer. And I remember when I started trading. So I approached trading with a very level head, very professional mind. I've been investing for years, and when I allocated a portion of my, my total liquidity to my trading account, 5 weeks later, I was, or 4.5 weeks later, I was in a drawdown. I had less money in my trading account than I started with, even though I was professional. I was trading well. And it was only on that 5th week where I went into new equity high in my account that I had true trust in my system and true belief that I could actually pull through something like that. But if I had to feed my family from consistent returns with that on my back, I would no way have stayed as level-headed as I did in the 5th week. I would be pulling the plug. It's very difficult to play the long game in investing if you have a week to live, in terms of expenses in your bank. You cannot do it. And we took I got into Bitcoin again yesterday based on some analysis and some fundamentals. And I know for a fact that people are copying it. I know for a fact, I got so many messages yesterday about where I got in and where I'm getting out and all this. And if you copied me, the chances are you're probably glued to your crypto wallet, staring at the price going up and down, and you're probably short with your family and snapping with them, and you're not in their conversation because you just can't concentrate. You're waking up in the night, you're sweating, and that is not what you want. That is not what you want to be doing if you're investing. You just want to.
That's actually another great tip is don't copy what other people do without truly understanding the strategy.
Yeah.
Because I remember at the beginning when I was kind of into investing back in 2009, 2010. Then I sort of got out of it for a few years because I didn't have any money. I had to sell the whole portfolio. And then I got back into it around 2016. And around that time, a friend of mine, Valentin Schmidt, he's a finance journalist. Actually, you can look him up on Twitter. He's pretty good. He was in Bitcoin. He did really well with Bitcoin in the early days. But he told me he suggested I invest in gold, right? Gold funds like GDXJ and a few. And he showed me this graph. Look, it's been going up for like several months. And I was like, oh, cool. Okay. So I just put some money in. As soon as I put my money in, it started going down. And it was like, I didn't truly understand the strategy behind like gold and timing and that it was kind of an insurance for your portfolio, an insurance against inflation and things like this. So I was just sort of like, dude, it's gone down. Like, this is poor advice. And he's like, no, trust. This could make you a lot of money over the long run, right? And actually, this year, I was able to pull out a load of money from that. I bought it at like 45 a few years ago, and it went up to 60 this year. So I took profits from it. And, if you don't understand someone's like their time scale of the investment, what the exact goal is, whether it's like to protect your portfolio, hedge against inflation, or to make money now, or all these things you've got to understand if you're going to copy someone, otherwise you just got to work out your own strategy, I think.
Yeah. And goes the same for trading as well. I mean, these signal services that are around, it's exactly the same. If they decide to stop one day, then what? Or as Ben just said, they know the ins and outs of the system. They know the probabilities. You don't. So how is your mindset not going to jeopardize that system? You're going to be in there thinking, this is broke. This doesn't work. This guy's lying because he don't care. He's got his money. So look, it's never a good idea to do that. Great advice, Ben. So coming to the end of the session, then what's on your horizon at the moment? What's the next steps for you? What's the plays for you? What are you looking at, focusing your energy on?
So right now on YouTube, I'm starting to build up my business channel, the Business Shifu, which actually I might change the name and just brand it as a personal channel for my own name, be like Ben Hedges in Business or something like that. Ditch the sort of cartoon branding, because the original reason I was the Credit Shifu was because I had a contract with another company. I couldn't show my face on camera, so I was just a voice. So I used this sort of cartoon and stuff. But it kind of stuck. So I'm trying to build that, because on YouTube, the Credit Shifu channel, it's very niche. So the audience of people who are interested in credit cards for luxury travel is maybe not huge compared to the number of people who are interested in like saving money, investing, all that kind of stuff in general. So I'm trying to build right now, my plan for this year is to build that channel. And, you know, I talked to some of the other YouTubers, you know, you've got like Brian Jung and people, you know, people who are in the sort of same field, right? And what a lot of the consensus is you need to be a bit more broad, and you need to be, you need to dumb it down a little bit so that ordinary people can understand if you're going to reach a large audience. Right. I remember actually, I remember when I was a kid, like I worked at a climbing center, and they said 80% of the income comes from the beginner's course. You know, even though they've got people going through more high level courses and stuff, 80% comes from the beginner's course. And some people just do that course and then they drop off, but their money. So it's kind of the same with a lot of different industries, and this stuff on YouTube, investing videos, probably 80% of your viewers are going to come from the more entry level stuff. Right. So, so I'm trying to build that channel. And then basically my strategy now for business, and I'm still doing like Star Wars and Star Trek videos as well, like one a week. But my strategy now for business is sort of make as much money on YouTube as possible. And then I take that money, I invest in the stock market. I put it in there for a period of time to build up a large sum. And then I take that as a down payment and I go and buy properties. So this year I actually bought my first, I bought my house in 2019 that I live in. And then this year I bought a piece of land, 3.7 acre piece of land, which I'm building. So I bought that cash with the money I made from investing in March.
From YouTube to the stock market to March, right?
Yeah. So with about 60-70% of the portfolio I sold, and I pulled that money out and bought this piece of land. And then I'm going to go to a bank for a construction loan, and I'm going to build this luxury cabin, which will have hot tub, sauna. It's going to be a luxury Airbnb. And if you do it, we've done some research into this, these very stylized cabin in the woods type things. You can get a lot of money per night. You can do sort of $350 to $500 a night. Okay. Your audience is like rich CEOs and people from New York City who want to get out of the city. And because of COVID, they don't want to go on planes and stuff. So they want to do like a local holiday, right? So they'll drive up to the mountains where we live, about an hour and a half north of the city. And so that's the business plan for this year, is to finish the construction on this cabin and start renting it out by autumn, which is one of the main tourist seasons in New York. You got the beautiful autumn leaves, colors and stuff. And then at the same time, keep putting money into the stock market to save up for my next property, which will probably just be a regular property. I'll buy it and either do it Airbnb or rent it out. So it goes from YouTube to the stock market to properties.
Amazing. Wow, man. So I love it. So there's so many great points. YouTube, first of all, that is a business these days. I don't know what, like YouTuber, it shouldn't be a word. It's essentially, you're just doing your job on YouTube. It's basically,
it's a weird word. Like if I need to write down my occupation on a form, I say chief financial officer of a media company. But if people really want to know what it is, it's like social media influencer or whatever.
Yeah, exactly. And the fact that Ben mentioned about broader, if you are into YouTube, something I'm focused on is going for 1 million subs in 2 years now. So 100,000 by the end of this year is my goal, 1 million and in 2 years, and by going broader. So as Ben was saying, if you're into, very, very niche subject, that's great for connecting and making sales with your clients, and it gets rid of all the confusion. People get that you've got the answer to their problem because of that niche. But to funnel people down into that niche, you need to get them to understand what it is you do, because sometimes it can be so niche that certain people don't get it. But so, for instance, we're going out much broader with money, finances, and savings, and cash buffers and things like that, which is why I created my Tiers of Freedom program. So that's similar to what we're doing on YouTube as well. And again, invest the money, spend it wisely, spend it on investments that are going to earn you money and pay you to live. And that is financial freedom. Ben,
buy investments, don't buy liabilities.
No, exactly.
I really wanted to get a Rolex,
Right.
And in the end, I was like, do I want to spend like 8,000 on a Rolex when I could be buying land? And I went for a Citizen for $350, and I took the rest of that money and I invested it.
Yeah.
But obviously there comes a time when you can spoil yourself. But
yeah. And a Rolex isn't
pick
even
the right
a bad
thing,
one, by the way. Like a Rolex isn't even a bad one. That's like I've got the GMT Master 2 Batman, and it's the second one I've got because when I bought it, it went up so quickly. I was
That's
so
true.
tempted to sell it. And now the one that I bought again for $599.50 brand new is selling for 15 grand because they just don't make them anymore. And that was like 3 years.
Yeah, that's true. The price can go up, can't it? Yeah.
Yeah. When they stop making them, if you get the right model, a Rolex is a good one. But yeah, I totally understand. And everyone's wearing Apple Watches now or just cheap digital watches. So it really doesn't matter. Ben, it's been amazing chatting to you, mate. Really valuable session. I know the listeners are going to get a lot from this. All of Ben's details will be below in the description. If you're watching this on YouTube, they're all in the description. And guys, I hope you got value. If you have, please go and give it a little review on iTunes. We got 298 5-star reviews at the time of this recording. Just need 2 more to get to 300, and that will make the weekend. If you got value from this, guys, let us know. And until next week, have a great rest of your day and weekend, and I'll see you then.
For news on all future events and updates, go to jasongraystone.com.